Thank you for joining us at XM.com for today's market comment by Rafi Boyadjian. I'm Maria Pashurdavis. After a string of upbeat data on the U.S. economy, investors almost breathed a sigh of relief on Thursday when the latest retail sales numbers disappointed, calming nerves about an overheating economy. Rate cut expectations have suffered several setbacks since January amid a pushback from Fed officials and the labor market and inflation not cooling fast enough. The continuous resilience of the American economy has prompted a sharp rethink on how aggressively the Fed will slash rates this year, with investors pricing out almost 3 rate cuts. But perhaps the most surprising aspect in all this has been how well markets have adjusted to the first rate cut arriving no earlier than June. A stronger than expected rise in January retail sales had the potential to cast doubt on even a June cut, hence the positive reaction to the 0.8% month-on-month slump in retail spending. Treasury yields slipped in the wake of the retail sales report, weighing on the U.S. dollar. But the moves were modest as Atlanta Fed President Raphael Bostic appeared unfazed by the weaker data, maintaining that it was too early to declare victory on inflation. However, there was a stronger response in equity markets as shares on Wall Street extended their rebound from the sell-off earlier in the week. The S&P 500 gained 0.6% to close at a new all-time high, but the Nasdaq lagged as tech stocks underperformed. Nevertheless, European and Asian markets were buoyed on Friday on fresh hopes that the European Central Bank will soon cut rates, while the Bank of Japan might delay a rate hike. In the currency market, the Japanese yen was on the back foot again, weakening past 150 per dollar. The pound was also down against the U.S. dollar, failing to receive much of a lift from much stronger than expected retail sales figures out of the UK for January. The euro, meanwhile, was only marginally lower against the greenback, despite some dovish rhetoric from ECB policymakers today. Governing Council member Edward Cicluna left the door open to a rate cut before June, warning that waiting too long could choke the economy, while Francis Villeroy also upped the pressure on his hawkish counterparts. Even rumors that the ECB might adjust its policy statement in March failed to knock the euro. Thanks for watching today's market comment here at XM.com.